This is a video for Friday, March the 20th, and we're taking a look at the three markets here. Let's look at what happened at 11:45. Right here at 11:45, that's where the market was when Donald Trump gave a fiery press conference that lasted an hour and 40 minutes. The last comment was made 1 hour and 38 minutes into the conversation, where the president basically blamed everything on the previous administration. And this was the market response to what Trump had to say. So that's 11:45, 12:45, an hour later, and then another half hour after that brings us to 1 o'clock. So the markets ended right here, a little bit lower than when he started to speak, but then they just continued to tank right after that. The problem is not the coronavirus. The problem is the communication of the coronavirus and the confidence that the market has in the communications that they're being given. So read into that what you want. You pretty much know what I think. FinViz, advancers and decliners, not quite 2-to-1, 61 to 37. Right up until midday, the advancers were leading the decliners. There's another look at the effect of President Trump's press conference. There's roughly 11:45, and when Anthony Fauci and the experts started to talk, the market picked up a little bit. That was towards the end of the conference. And then when Trump made his last statement, the market tanked. Let's look at the stock market breadth. It's still going up. So our short-term, medium-term indicator shows that it's going up. I am definitely looking for a trend downwards, and I'm also hoping to see support along the line of this point, these 3 points right here along there. And that will show me that there's a base to this bottom. Let's now look at the summation index, which took a new low today down to 2610, not as low as we saw in 2008. Here's a 2873. We had a bounce and we came back down and we really suffered as the market finished its total decline. So there's certainly more to be had in this, but it's possible that we're not far from the bottom. It's just that we're a long way from getting back to the top. So here is the S&P on a weekly basis. The stochastics show that we're oversold on a short-term basis, but not on a long-term basis. We are still holding, no we didn't, we lost the 38.3% on Friday, and that is a little bit worrying because we had been holding on to it for 1, 2, 3, 4, since Monday, Tuesday, Wednesday, Thursday, but then Friday we lost it all. I don't think anybody wanted to go in with positions that they had bought this week. Doesn't mean that people were still selling their their long-held positions, but any positions that they bought at the beginning of the week, they probably sold they did sell, rather than hold them over the weekend. So we've lost the 38.2%, which tells me that we are going down to 2033, and the next chart support would be 1835. So let's keep an eye on both of those. The VIX is our indicator of when we've reached our maximum in the panic. We haven't reached our maximum on a 2008 basis, but we only had 1 week where we had this really big spike up. This was where we were for 1, 2, 3, 4, 5, 6 weeks. And we've exceeded that point this week. Let's look at it on a daily basis. We exceeded that point for 4 days in the week, but the volatility dropped on Friday. So let's keep an eye on that. Volatility is at its highest. This is the opposite now of the stock market. So this would show that the volatility should go down, which is a good thing for the market. Apple down $1.24 on a pretty wide-ranging trading day, and look where it stopped and got its bounce, right where we drew this green line, where you saw this trend here from 1, 2, and then a whole series of points here. That was a support area. The next support area would definitely be right in here at 215.67. It's possible we hit 215.67, but both of the stochastics are telling us that we're really oversold here. And you know that right now Apple is a bargain. I have sold the September 305 and 310 calls, and I sold them for like $12 and $15. So it's just money sitting there waiting for me to take. And if we get back to 305 and 310, wonderful. I've recovered all of my money, but I've also managed to keep that extra premium. So now my break even is going to be more like closer to 320. Not break even, but my get out point will be 320. Amazon was down. Don't know why. This might be, people are saying that this, Walmart and Costco, might be the only businesses left when this is all over. Our AGNCP, the REITs, this only shows you today's activity, but they did drop a little bit, but they had a 45% increase the day before. This is a wild move for Caterpillar. Home Depot, which I bought another 100 shares of, probably in this area here, 165. But then I immediately sold the September 165 calls for $12 and something. I mean, that's tremendous premium. So I'm willing to hold on to Home Depot, which when we get out of this, people are going to flock into Home Depot and are going to be starting to buy stuff again when they have money, of course. And that's going to depend on what the government does in terms of keeping people whole. But the pain for Home Depot is long term. When we're going to see the bottom for Home Depot, we've hit the 38.2% and we've fallen below it. So our next point is the 50%. Let's draw, whoops, what happened here? Let's draw a line on our weekly chart, and let's just see where our weekly support is. We can get rid of the cloud for the purposes of doing that. Our next area of support on the weekly chart would be right in here. And we are certainly heading down to that point. After that, we've got another support area right here. So we broke through that line, 38.2% this week, and on a daily basis, however, we just fell below it on Friday after struggling for Wednesday and Thursday at the 38.2%. So Home Depot is going to be a place where America will make its recovery, but they have to have money to spend first. And the people who have been laid off and the hourly workers are more concerned with spending their money on rent and mortgage than they are on fixing things up at home. Whirlpool, 74.25. It's going to take an awful long time for this stock to recover. It's hit our other support line, but did it close below it? Yes, it closed below it for 3 days. So on a weekly basis, our next support area is down to 54.79. Can you imagine being able to buy Whirlpool for 54.79? I mean, there's going to be a time when you're just going to have to use the margin that you've got available, all of your cash and any money that you can borrow to buy into this market. But it's only when we see money getting back into the hands of people that were put out of work. And that's something that the breadth indicators don't show us. And it's something the market doesn't show us. So we've got to keep an eye on when people return to a point where they have money to spend. Have a good weekend. Expect tons of more chop next week. Just one more look at AT&T. What a miserable drop. Coming down to our other area of support. Now the dividend on AT&T, the concern now with dividend stocks is who is going to continue to pay their dividend. There may be a rumor out there that AT&T is not, and that's why we saw the sudden tank this week after a tank last week, but a bit of a recovery last week, but then a massive tank this week. Boeing said that they're not paying their dividend, but this has nothing to do with the coronavirus. they were hurting because of this Supermax 737. So we need to stay and pay attention to the other big dividend players: Johnson & Johnson, Coca-Cola, Caterpillar, Deere, Archer Daniels, Midland. Keep an eye on those.